Hey everyone, how's it going? Hopefully you can all see me. I'm not sure. I'll wait for I guess there's a delay. And there we go. Yeah, I'm hearing myself. Give me 1 second here. Okay, all right. All right, so I hope you guys had a great weekend and a great day so far. You can see that it was kind of boring, in my opinion. At least it was boring for me all day. I was struggling to stay awake all day just because the S&P was not, there's hardly anything that was moving all day long. Hey, C. Fazio, Bugs, Spider Monkey, K. Illinois Grain Farmer, Richard, Phil, Bugs. Oh, we already said Bugs. All right, awesome. So today was just real quiet, and I wasn't expecting much. Being a Monday, there's not a lot going on. There's something that we're going to talk about, a specific phenomenon in the markets that I wanted to point out today. But before we do that, let's take a quick look at Gamma, what happened with Gamma, and then we can go through the phenomenon that I wanted to share with you today. I actually shared it with you 2 or 3 weeks ago, or I think either in the very first live stream that we did, or it may have been in a class in a different program like Profit Panel or something like that. It's hard for me to keep all of them straight, what I say where. So if we look at today's gamma level, we said that early in the morning, this was 35 minutes after the market opened. We saw that big spike at 631, and I said that this is probably the high of the day. It's probably not because we were already at 631. I didn't think that we're going to necessarily pin there, but it was probably a high of the day. And then the reason why I felt that way is because one, it's Monday, not a whole lot going on in the market. It represented another all-time high, and we continuously make all-time highs and then back away from them. So that's the market that we're in. We're mostly chopping sideways, but we do keep making all-time highs and backing away from them. So once we hit that 631 gamma pocket, it was pretty likely the highest probability move from there was backing off as well. So in that vein, or actually, let's take a look at the intraday action. And you can see that pretty early on, we moved up to 631. We went a tad above it and we hit that 631 and a half-ish area a couple of times before really backing off towards the end and selling all the way back to, I think, exactly where we opened. Yeah, open 628.77, close 628.77. So yep, exactly where we opened. So that's basically a sign of the all-time highs keep getting sold off. Every time we make a high, we keep selling away from it. So the market isn't in a hurry to go higher, but it doesn't want to go down either. So we're just stuck in this sideways pattern until we finally find a catalyst that will move us out of it. Now we're getting to basically the heart of earnings season very soon. So earnings could do it. If we're not happy with the earnings, or if we're just super ecstatic about the earnings, that could finally break us out of this rut. And that's the most likely thing that is going to break us out of this rut. But until we do, let's take a look at this phenomenon that I wanted to share with you. So in my all access membership or my diamond membership, I give extra trades, and they tend to be on a portfolio or broad view level. So the trade that I gave today, and that I will continue to give until it's no longer appropriate, is a weekly income trade on the SPY. And the idea behind this is that when we're at all-time highs or even at a local high, it is difficult for the market to run up continuously. So let me see if I can explain that in a different way. So right here, we hit an all-time high. Let me just mark this one right here. And then here we matched it again. So here, when we made a new all-time high, let's just say this was, that was right there on June 7th. If we go actually, let's do a weekly. June 7th, okay. So this one, how much did we close here at 614.91? We'll just call that 615. The next week, we closed at 625. That's a 10-point move. So my question is, once we hit an all-time high, how many weeks in a row do you think we can make a 10-point move? Right? It's different here when we're at a bottom. So this week was a what was that? A 24-point move. This week was a 16-point move. This week was a 29-point move. Okay, but then when we got near this local high again, suddenly it's minus 15, plus 10, plus 9.75, flat. Then here is a 20-point move, a 10-point move. So basically, once the market is near a high, it naturally has a ceiling as to how far up it can go, or how quickly it can go up. So it's not going to be able to make, so we saw a couple of weeks where it made 20-point moves, right? But it's not going to make 20-point moves week after week after week after week after week. If it could do that, then within 5 weeks, we'd gain another 100 points. We'd be at 730. And another 5 weeks, we'd be at 830. And another 5 weeks, we'd be at 930. And nobody expects us to move that quickly up on the S&P 500. And actually, 20-point moves aren't even, those are very unusual. It's because we had this V-shaped recovery. So if I look at this one right here, well, I guess that was a 20-point move. But then all of these other ones were very, very low, very flat, right? This one's probably another 27-point move. So those 20 to 30-point moves, they're pretty unusual on a 1-week basis. They do happen, but what's really cool is that once they happen, I know that it is very unlikely that they're going to happen anytime soon. Okay, so this 20-point move was not followed another 20-point move until, well, so this, you could say that's a 20-point move, but versus where the high that we made over here, it was pretty flat. And it wasn't until all the way over here where we got another 20-plus move. Okay, and these 20-plus moves are pretty unusual. Because if we look over here, how many times did we get a 20-plus move? We didn't. They're all 10, 11. I saw 13 right there, 5, 6, 7. You see that these bars that we've been in since August, they've been a lot taller than these bars over here, all the way back, except for a couple of bars back here. So we entered a different volatility regime in August. Okay, so let's see if we can see that in VIX. Okay, so over here see before August we were in this volatility regime. We were below 15, and then when we hit August, we went above 15. We went 15 to 20 with some spikes above. So that's reflective of the volatility regime that volatility regime change. And right now we're in that 15 to 20. And so, yeah, sometimes we get 20-point moves in the SPY. So the phenomenon that I just, again, want to point out is that we cannot have repeatedly, week after week after week after week, 20-point moves. Otherwise, we'd be at SPY would be at 1,000 in no time at all. So once I get a 20-point move, then I can pretty safely say, okay, I'm not going to get another 20-point move probably for several more weeks. And even if I do, if I lose that trade, then I know that the probability, it's not like the coin flip where each one is independent. The market does have some dependency on how fast it moved previously. There's a natural limit for, like, I can flip a coin. There's nothing to say that that just because I had heads last time, I can't get heads this time, or just because I got heads 10 in a row last time doesn't mean that this time I can't get heads. But you do have that dependency in the market. If the market moved 20 points last week, the probability of hitting another 20-point move is very, very low. And then if you got 2 in a row, then hitting that 3 is like almost impossible. So that's what we're banking on here. It's been a few weeks since that 21, but I can put on a trade and say, hey, I don't think this, each week after this, I don't think that we're going to move 20 points. And I may be right for 3, 4, 5, 6, 7, 8, 9, 10 weeks, and then we get that 21-point move, and I lose. As long as my loss doesn't even come close to wiping out all the gains from the weeks before, then I'm still very net profitable. So I've been putting on, I'm not going to give you guys the exact trade because that is reserved for my all access or diamond members. But I just wanted to point out this phenomenon to you guys so that maybe you can think of your own trade to put on. So we are at, because this, I mean, how often do we reach all-time highs, right? I mean, back here, we reach all-time highs. It was quite a while before, maybe a year before we hit all-time highs again. And then we had a run of all-time highs. Then we pulled back for several months before we re-reached the all-time highs. So this is not something that we can trade all the time, but once we get to all-time highs, we can do it. If you want to trade it during these kind of trends upwards, that works too. It's just that when you get a pullback, stop trading it until you have a local high again, because the pullbacks can move multiple weeks in a row. So I pulled back here, and then I got a, what is this, 21, and then 7. Well, even on this one, it didn't go multiple in a row, but for sure on Liberation Day, we did, right? So we got a 28, then we got a 24, then we got a 16, not quite 20, and then we got a 30 right here. So, when we pull back, so so if you're, for example, if you're doing a vertical to the downside, or you make money to the downside, then you could have made money a couple of times down here, and until you felt that there was a bounce, right? So you want to avoid that first bounce. So depending on how deep you felt that pullback was going to be, so for example, you said, oh, we hit the MA50, maybe I'll stop until I see a bounce. So you would skip a few weeks until you went. If you were more confident, you would have tried all the way down to the MA100 or maybe even the MA200. But I probably would have stopped at the MA50 and skipped several weeks. So that's just a market phenomenon. I just want to share with you guys that there is a dependency. There is a natural limiter on the speed of how fast the market can go up. And unlike on the way down, actually, the down can go crazy, as we saw during the Liberation Day on COVID. Those are great examples of how fast it could go down. But on the way up, even on a V-shaped recovery, yes, we can go up very quickly, but the stacking multiple weeks on top of each other, week after week after week, that's very rare. So that is a tradable phenomenon, and I wanted to point that out to you guys. Let's see what you guys are saying. Hey, Bernadette. Hey, Tim. Thanks for the gamma message. It helped gauge my trade today. Good, excellent. I pointed out in Roger's VIP that price looked like a dangerous double top, and it flushed. Yeah, I gave back all the gains. Yeah, if you didn't get out, then, or like if you had a long and you didn't get out, then yeah, for sure. So hopefully that's a nice little tidbit for you guys. You can start making your own trades based on that phenomenon. Stairs up, elevator down. Yes, that's right. Okay, so let's take a look. We already sort of looked at the volatility regime that we're in. Basically, we're just, VIX is going nowhere. We're still in a buy the dip type of environment. but there's no dip. So if there's no dip, it makes it really hard to get into positions. So if the S&P is doing this, then most stocks are doing this also. So that makes it really hard to find opportunities. You don't want to go short because this is still a very strong uptrend that basically looks like it's just moving along that EMA 8 and sort of bouncing off of it. So you can't really comfortably go short, and your longs, they're just not giving you any pullback opportunities. You might be trying to trade breakouts, but it's not really the right volatility environment for the breakout. So unless you happen to be in a sector that is exhibiting unusual volatility, then your breakouts aren't really going to work out for you. They'll either make very, very little money or they won't make any money. They'll end up being losers. So the exceptions are those sectors that are experiencing its own volatility. An example of that could be, for example, nuclear. Let me see if I can find a nuclear ETF. Eura. Yeah, that's Eura. Okay, so Eura, you can see that this is much stronger than the S&P 500 locally. You can tell that's way, 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 way up above previous all-time highs. And it's very strong, strongly above both its MA50 and MA200. SPY is too, but not as strong. You can tell that the MA50, the MA200, the EMA 8, those are a lot closer to each other than they are on URA. And so this is definitely a lot stronger than the S&P 500. We're actually getting some directionality over the last 2 weeks. So the bounce off of the EMA 20 and moving upwards. So this is experiencing its own volatility. I wish we had a volatility index off of Euro and we would see that volatility spike. But one way that you could see it is you can see it with ATR. Okay, so you can see that ATR ever since right here, May, you can see that it's been going up and then it kind of flattened out, but it's still at the it's versus any other time in history, it's basically at the top. The only other time that it matched it was over here in 2021. Okay, so if I look at the SPY, you see that the volatility is way at the bottom. Like we've almost never seen a smaller ATR. So two very, very different pictures. One is near the bottom of its chart and the other is near the top of its chart. So URA is experiencing volatility, unlike the broad market. And so those are the types of opportunities where you could potentially look for breakout opportunities. So when we go and we look at our sectors and our sector breadth, then nuclear would be something that I would look at. I started looking over the weekend. I started working on looking at a broader base of sectors. There's the 10 or 11, what if you want to call them 11 main sectors that are classic, that are part of the S&P structure, that are, I guess, are definitely represented by the S&P 500. And there's others, like for example, nuclear is a sector, or you could call it a subsector, or some people call it industry, that is not necessarily represented inside the S&P 500. I don't know how many nuclear stocks there are in the S&P 500. I haven't checked, but I imagine not too many. You could say the same thing about many other sectors. For example, aerospace is, I know there are some in the S&P 500, but are there enough to say that the entire sector is well represented in the S&P 500? The answer is probably not. You know, there are a lot of sectors like that are not like specifically well represented in the S&P 500. Those 10 or 11 main ones we know for sure are well represented, but there's a bunch of others that are not necessarily. For example, crypto. is definitely not well represented in the S&P 500. So I started expanding my list of sectors, and when I'm done with that, maybe I'll share it with you guys. But my point is, right now, especially with the market being very flat, I want to look for sectors that are exhibiting either trend much better than the S&P is, because better than this mostly flat trend right now, or flat, tiny bit up, flat, something that is trending much better, or something that is exhibiting a lot more volatility than the S&P 500, because then I can trade other types of like breakout strategies. So some of the top nuclear stocks, for example, we already looked at them a couple of weeks ago, was SMR. You see that? So we could have traded that. That was a breakout that could be traded, and now a pullback. Okay. Breakout, pullback. If this bounces, either right from where it is right now, or we could say off of that EMA 8, if that bounces, then that was a breakout, retest, and go. So that SMR could be really great. Another one was nano nuclear energy, NNE. Okay, this one didn't break out. It failed, so pulled back. And then OKLO. Looks very similar to nano. So this did not break out. Okay, but SMR did. So what we would do here is OKLO. If it does break out, then we could trade it for a very short-term trade, then wait for a pullback and see if it goes. Same with NNE. Okay, SMR though is definitely the strongest of those three, and it already did break out. So I would be paying way more attention to SMR than I would to the other two, and just trade a bounce. If we get it, we'd trade a bounce off of the breakout point. Okay, so let's take a look. I want to see signs of buying. I'm not seeing signs of buying in the broad market. Haven't for quite some time. Gold, silver is still very flat. Bonds, chopping all around, but still kind of in this downtrend. With dollar, DXY, same thing, bounced off of that trend line. Looks like it's heading lower. It's not in a rush to do so, but the most likely direction is down from there. We want to be very aware of that. That's probably healthy and good for cryptos. So if I look at BTC USD, and I think Ethereum has been breaking out lately. Okay, Bitcoin is looking pretty strong, pretty good right there. It was very flat though, so this was a breakout and a retest, but we need volatility to come back into it. Ethereum. Yeah, Ethereum is going wild. Ethereum definitely stronger than Bitcoin. Let's look at those Bitcoin treasuries that we were looking at before, MSTR. Yeah, and more following Bitcoin than Ethereum. Mara, same thing, Galaxy. Galaxy had some legs to it, but sold off though. These highs are getting sold off. So this would be more like the breakout. Okay, so breakout, maybe retest, or maybe all the way, by the time it comes down, the EMA 8 will be higher. So maybe roughly where I'm drawing this line right here would be a retest and maybe a bounce. That could be a potential entry. There was another one, ADR, ADE. No. Well, there's another Bitcoin or cryptocurrency that someone asked me to look at last week that looked like it was breaking out as well. So overall, you'd have to select your coins very carefully. It's not broad yet. Anything broad is following Bitcoin. So I'd wait to see if we get a bounce and Bitcoin before going into that. Gold is still chopping. Nice little move higher today, but right into resistance basically. So you'd be waiting for a breakout in gold as well. And again, volatility is low. So we would need a shift in the volatility regime of gold before being really interested in it. Let's see. Am I bullish or bearish on Mara or XRP? Mara is bullish. Oh, you're above the MA 200, broke out. So this was a breakout retest. So this is a great example. Okay, so we broke out of the MA 200, retested it, and then shot up. Then we came back to retest or kind of sort of retest that EMA 8, then bounced off of it, but kind of went up. We went up, I mean, if we look at the high, it did go up, and now it's pulling back and retesting again. The only kind of sort of thing that makes me hesitate is that the EMA 8 curled down. So we might actually come and retest that EMA 20. And if that's the case, then a bounce off of that would look like what I've been talking about ever since the beginning of this post-market live stream is MA 50 up, okay, EMA 8 was going up, was following it, then it reversed direction, and maybe it'll keep on reversing direction until we hit the EMA 20 or 200, and then maybe we bounce, curl back up, we get a bounce. If we get a bounce, the EMA 8 curls back up. That would be my next entry for Mara, because this one off the EMA 8 failed, and that EMA 8 already is starting to curl downwards. And so Mara, I won't be interested until that EMA 8 curls back upwards. And then XRP moved up and started consolidating. So after a sharp move up, we usually anticipate that we consolidate. So you could have said that here, if this bar had closed near the top rather than pulling back where it did, then we would have also expected that to chop sideways. But since it pulled back fairly significantly, it could still move upwards. But this one, you see how it closed near the top, and then we're just chopping sideways. Okay. All right, so sectors, we went over sectors, signs of buying. We'd have to look at specific sectors in order to see signs of buying. We can do that real fast on the list that we have rather than the expanded list that I was working on. Let's just see today. Oops. Okay, silver and gold. That's interesting. Communications and treasuries. That's interesting because we saw sort of this combination one time last week also, but that also got sold off. So let's see if I can find the exact day where we had this combination. Biotech, communications, retail. I'm probably thinking of this day, Monday the 14th. Okay, yeah, so Monday the 14th. But then we got this and this, and basically the market went nowhere. So it didn't really gain any legs. If I look at Dow Jones, yeah, it's just chopping sideways. If I look at RSP, just chopping sideways also. So no sector is really, at least of the traditional sectors, no sector seems to really be gaining. You can look at a 1 week. Silver, defense, 1 month. Semiconductors, tech, defense. 2-month, semiconductors, defense, tech. Okay, so now I'm starting to see a little bit of pattern. Okay, so what I would want to do is look at semiconductors, defense, and tech. Okay, see and look at their relative strength, because this is implying that it's actually pretty decent. SMHC, same thing. ITA. So on a 1, 2, and 3-month basis, this is what we're seeing. If I look at 6-month, ITA, silver, gold, SMH, okay, XLK drops further, but SMH, ITA are still up here. So this makes it a lot more interesting to take a look at those. If I look at SMH, definitely a uptrend, definitely stronger than the S&P. This is probably what is dragging the S&P upward, or well, definitely helping it maintain its level and maybe pull it just slightly upwards, since the SPY is sort of creeping higher. If we look at those mags, oh wait, not mags, tech, same thing. And of course, SMH is part of tech. And then defense. Yeah, defense is looking great. So if we take a look at those, SMH divided by SPY, yeah, definitely strong relative to the SPY. XLK divided by SPY, yes, for sure. And then the ITA divided by SPY. Same, not as strong as the other two, but still quite strong. And this was a breakout beginning to pull back that EMA 8. If it doesn't bounce off of that EMA 8, then I'm going to look for it to potentially bounce off of this breakout point. Okay. Let's see what ITA looks like normally. Yeah. So probably a pullback in ITA more imminent than what we would see in SMH or XLK. So let's just take a look at a couple of the big boys in there. NVIDIA, very strong. So the old gap up, I said last week that this gap up would get sold. Okay, and it's not going anywhere. So it's definitely not getting bought. Can we say it's getting sold? Not to enough of a degree for it to affect the price to make it go back down. So this looks like it'll probably just chop at least into the EMA 8. Microsoft is doing great. That's a beautiful trend right there. Beautiful trend. And then who else? Who else is in there? Google. Wow, Google going kind of parabolic. So this definitely is more of a breakout. But they have earnings in a couple days. So we'll see what happens with Google. And then Apple, Amazon, although those are more consumer tech. Yeah, consumer tech is not really. Amazon's looking pretty good though. Okay, let's see what you guys are doing. Capitalize on gold today. Great. Okay, let's see. Oh, there was one more. One of my alerts triggered on Newmont. So we were talking about Newmont. We talked about how this was a great buy entry over here, but then we got that weird news. And then I said that we would recover very quickly within 3 or 4 days of that news. And look what happened. 1, 2, 3, 4. Today, 4th day, we've recovered. We've officially recovered. Why do I say officially recovered? Because that EMA 8 has resumed its upward movement. So reverted into the same direction as the upward movement. So if you happen to catch the open today, where at the open, that curl would have been up. But then we smacked right into this 60 resistance right here. We closed just below it. So I would want to see Newmont get above that, stay above that, perhaps even break this high over here around 60.75. or 61 before I got really comfortable with going back into Newmont. But then, of course, we have earnings right here. But what I wanted to show you was that news phenomenon. If it's not something that fundamentally affects the business, its business trajectory, or in other words, if Wall Street isn't going to change its future valuation of the business because of the news, then we're going to bounce right back within a few days. Right? So the Newmont was an excellent example of that. Okay. All right. So based on this, I would want to make a watch list on SMH, ITA, and XLK. There's probably a little, maybe even nuclear. There's probably other sectors, but again, I'm not done finishing that list. So we'll just go with those for now. Let me see. Let's build a quick little watch list. Oops. Post market watch list. Okay, since I accidentally deleted all the ones that we were watching before, all those Bitcoin treasuries and all that. So let's just pop a few of those on. MSTR, Mara, Galaxy. Okay, and then nuclears, NNE, OKLO, SMR. And let's see if there are any others that we put on there. Take a look at LEU and UEC. Yeah, we could on a pullback, we could, and UEC, same. Okay, so we'll add those. And then let's take a look at let me take a quick look at financials. No, not yet. Okay, XLK. Let's look at a handful of XLK. CCJ. Yeah, CCJ also. NVIDIA, Microsoft, Apple, not interested. NVIDIA, Microsoft, yes. AVGO, Oracle, Palantir. AVGO. Looking great. Oracle, yes. Palantir, yes. So MSFT, NVIDIA, Palantir, Oracle, AVGO. IBM, AMD, CRM. That's as far as I'll go. IBM. I mean, that EMA 8 curls up, sure. AMD. I'll add that, and CRM. No to CRM. That definitely does not look good. And then let's look at SMH. We already have some overlap. NVIDIA, TSM, EMAT, LRCX. For sure. LRCX, yes. And TSM, I already did TSM. AMAT. If it can bounce, yeah. TXN. Okay, I'll add it. It's not my favorite, but I'll add it. Okay, and then we'll look at defense. GE, RTX, Boeing. Yes. 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 Netflix. I'll take a look at Netflix. NVTS. As a semiconductor, a very small cap. And very, 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 very volatile. So this would be something that you would definitely want to take very fast gains on. If it breaks, it could run. Okay, so since it is experiencing that type of volatility, this is a breakout candidate. So you could do that if it breaks out. Or if it breaks out, then you could play the pullback. Like if it breaks out and you can't get in time, you could play the pullback. But this is not what I normally look for because it's doesn't fit the regime that I'm looking for right now. I wonder if it even has tradable options. Has weekly options. That's pretty liquid. Okay. Yeah. Yeah. If this is your cup of tea, high volatility breakouts, then yeah, a good candidate. And it's so cheap. I mean, why risk time decay? Yeah, you would just buy shares. Okay, and TDG, HWM, GD. Yeah, to all of those. GD is weaker, but oops, I need to get rid of DG. We'll just go a couple more down the list. LMT, NOC, Axon, and Rocket Lab. No. Well, plus it has earnings. Rocket Lab. Oh, parabolic. I was in Rocket Lab last week. Yeah, I went parabolic. It needs a pullback, which looks like it's getting. So I'll add it. And then there was one more. Axon. Axon, not yet. So I'll delete that. I think I might have accidentally added a few in here also. Okay. So we built ourselves a nice little list to things to watch out for this week. All right. ANET and VST. ANET, yeah, the MVTS was very, very volatile. ANET is looking very good. I guess this would be communications, maybe. You can add ANET. And then VST. VST, I almost issued a trade alert on VST today, but it pulled back. It basically did what SPY did. It went up and then it pulled almost all the way back. The good thing is that it stayed above that EMA 20. I'd be looking for a bounce. And again, that EMA 8 up, down, not really up far enough, and then cut it down like that. So I would call that, overall, I would call that up, down, and then kind of sideways. So I wait for this to go up. So basically, personally, I'd be looking for a green bar that closes above this open right here, or maybe even this high right here. And then I would call that a match of the longer term trend. Okay. So, I mean, we could put it on a list. We could watch for that. There's nothing wrong with it. Okay. All right, so we have our list for this week, and we ended a little earlier than I thought we would. We could talk about how far did we get on the trading plan? I think we talked about timing or execution. We talked a little bit about execution, I think. So there's not that much more to talk about because your management is going to be 100% dependent on your execution. And there's no way I could cover every single, oh, you buy the single 70 delta, you buy the single way in the money, you buy the single out of the money, a vertical time, calendar spread, whatever. So every single one of those is going to be managed differently. So I can't give broad generalizations on the management. So I won't go in any more detail on the trading plan. Am I going to post the list anywhere? Sure. I can throw it in the Telegram group. Yeah. Or I can try typing it real fast here too, but MSTR. And a couple more. Okay. Okay, so I think we can wrap up today. We got a good view of sectors that are in focus. We still are in the same volatility regime. There are signs of selective buying in selective sectors. So those are definitely the ones that we want to focus our attention on, especially with the S&PY just sort of creeping higher, and any high is getting sold off. So we've got a good picture of what to pay attention to this week. All right. Any questions before we sign off? I have to wait for for the delay. I think we're good. Okay. All right. All right. It's great seeing you guys, and have a great rest of your day, and I will see you all tomorrow. Bye, everyone.